Good morning, everyone. This is Holly with Military Home Base, and this is our morning with my other boss. Because y'all know Iris Green. We talk how lovely she is. I finally have dragged Jason here to say, do this live with me.
Yes.
He's going to educate me. This is called, what did we call it this morning?
This is, well, technically it's the Mortgage Minute.
Mortgage Minute. There you go.
But now it's the Mortgage Minute with Holly and Jason.
And Jason. I've invited myself in because I'm like, Jason, that's good. I don't know nothing about this. Teach me today. Sure. Educate Holly.
So today we're going to talk a little bit about using VA financing to build a home and or renovate an existing home. So there's multiple different ways you can do that. Initially we're going to talk specifically on the construction to permanent financing. So this is, not a lot of people even realize you can do this with VA. There's only a handful of investors in the country that will do this. And we're one of those. So essentially, the VA loan process is very similar to the extent of it's still 100% financing. The financing is based on the total cost to build, which can incorporate the land value and or the land cost. So to give you an example of the difference, if you own a piece of land now and you've owned it for 12 months, you're going to use the value of that land plus the cost to build. That's your purchase price, and that's where you can use 100% of the financing. If you're going to purchase a piece of land and build at the same time, that's loan to cost, which is the cost of the land, cost of the building. So, go ahead.
If I'm going to go to South Carolina, let's do an example.
Yes,
because I think people like examples.
Sure.
Because your lingo does not work with Holly's brain and it will catch up, as y'all know that. Holly, wants to retire to South Carolina. I know you and Iris want me to stay here in Tampa.
Hey, Myrtle Beach is beautiful.
I know, right? Charleston, baby.
Charleston's very nice. Battery.
I know, right? There we can go. Yeah, I'm sunbathing. Today we're a little cloudy here in Tampa, but hey, we got a beautiful view going on here with the trees. But I want to go to South Carolina.
Yes.
I see property in Hilton Head.
Yes, you do. And it's expensive.
I know it's expensive, but you're going to help me.
Yes. Right? So you could secure that property now and essentially budget out for the next couple of years to build your forever home. Or you could purchase that property now and have the construction piece of that in place as well. Meaning, if you have plans for a house that you love, that you want to build, you've identified a builder that you want to do the building and the construction, then you could do it all at the same time. So you could do either of the two. You could hold the land for 5 years, 10 years, 100 years, and then build on it. Or you could, purchase the land and the construction side of the loan at the same time.
And now, you can't do that with the loan and all that.
Correct.
So.
You can't buy the land and only the land with a VA loan. You can't just do a land loan.
Did y'all hear that? You cannot do that.
But if you already own a piece of land or you're thinking about buying and building, then it may make sense to actually do that all as one transaction. If you own a piece of land now and it has a mortgage on it, when you close on the construction financing, it will pay off that loan that's on there along with the additional funds you need in order to build the home. The build process is fairly simple. There is a draw period. So you have a draw period. You're going to pay interest only.
We need to talk about that.
Yeah, interest only on the draw. So if you're building a house for $300,000, but you only drew $150,000, then you're only paying interest only on the $150 until you get to that number of $300.
So here's the biggest thing: the interest rates.
Yep.
And I see this everywhere. My person said it was only going to be, 4.5, and then now it is 7. What's wrong with that?
Yeah,
what did my lender tell me? Then it's a battle, and I'm like, I don't know, because I don't do that. That's not what I do with Military Home Base. I'm not a lender. I'm not a realtor.
Right.
But you educate us. Tell us what.
So first and foremost, if that ever happens to you, please call me. That's not normal. You shouldn't have that. So as far as interest rates are concerned, when it comes to the construction of perm financing, I believe is what you're asking.
Yep.
So interest rates, the construction of perm financing that we do is called a one-time close.
Okay.
So you're going to close one time on the construction side and the permanent financing. So when the home is completed and you get your certificate of occupancy, it automatically converts to permanent financing.
Okay.
So you're not having to go through a closing process again 9 months from now.
That's a good thing.
So, and in the interim, your interest rate is going to be, it's fixed, but it's an interest only, meaning you're only paying the interest on the loan initially until construction is complete. And then it converts to permanent financing on a 30-year fixed loan. Interest rates are a little higher on a VA construction or perm, as are they with a conventional construction or perm or whatever construction or perm. You can typically plan to have about maybe a half a point to a 3/4 of a point higher rate for construction or perm financing. But here's the thing with VA: once you've owned the property, the land, for 6 months, you can do a VA streamline, interest rate reduction refinance loan, ERL for short. No appraisal, no income documentation, no credit requirements. The only requirement is that you qualify for VA, which we already know because you have one, and you've made 6 payments on time, and you can immediately streamline into whatever the current market rates are, which is what most clients.
So we like ERL. Remember
ERL.
that.
ERL
is
interest rate reduction refinance loan. IRRRL. Three R's. They could have made that a little easier. So that's the construction of permanent piece.
Okay.
Any questions there?
No,
okay,
I'm
beautiful.
good.
So the next piece we're going to talk about is VA rehabilitation or renovation. I like using the renovation loan word better. Rehab's get a little sketchy. If you're missing a roof, it's not
you're not rehabbing. You might be.
You're not renovating. Yeah, you're not renovating. That's like a rehab.
But that's a whole nother show for a different day.
Yes. So VA renovation. Let's say you find a home in the area that you just desperately want to live in, but the house is just not quite what you really want. Lower ceilings. Maybe you want to make bedrooms bigger. Maybe you want to add some square footage. Maybe you want to update the kitchen and baths. Whatever. You can do that as well with VA financing, and that goes off the subject to completed value. So let's say you buy a house for $200,000.
Okay.
And if this house was completely remodeled, it would be worth $300,000. It's in a nice area. You want, but it's been completely updated. It's worth more money. That's your 100%. So that's where you're playing that game with. You want to stay within that $100,000 of earned equity that you're going to see through the renovation process once the home is actually completed with the renovation. And that's the money you have to actually use to do this. And again, with VA, you don't get this with any other type of product. You can't do this with conventional. Fannie Mae doesn't, they're 80% loan to value. You can't go to 100%. So it leaves a lot more meat on the bone when you have to do this on a conventional loan or an FHA loan for like a FHA 203K. Again, there's loan to value restrictions that you don't have on VA. And also with VA, whether you're exempt or not, there's no monthly mortgage insurance premium, which again puts you in a better position. So we do both. We do we do renovation, and we don't have a cap on a renovation. A lot of companies that of the companies that do renovation loans, some of them cap it at like 30 or 35 grand, similar to what FHA does with a 203K streamline versus a full. We don't have the cap, so as long as it fits within those parameters, we will do those loans too.
And again, who are you?
My name is Jason Brooks. I'm the Vice President of Retail Sales with eMortgage Management, and I am partner with Iris Green and Military Home Base.
We love Jason because he loves us military spouses.
We do a lot of fun stuff with military families in there, and we want to help to continue to grow in this community and as well as with the military spouses.
Teach us.
I do. I love to educate. Yes, I do. I've been in the business for 17 years. This is not my first rodeo. My dad was 32 years Air Force, so I grew up on MacDill. I grew up on Panama City and Myrtle Beach. Those are my 3 destinations growing up. So, which were all very nice. My dad was later in his career, so I got the nice places apparently. Yeah. Born in New Hampshire though, very cold. So. At the end of the day, anything we can do to help, we'd love to, and thanks for listening.
Yeah. Thank you for joining us. Remember that Military Home Base is bringing you home one base at a time. Thanks.